Okay, no problem. Welcome to our. I think this is second class, or this is second class for the February, for the month of February, right? So I welcome you guys all. So now, do you since you started trading, do you trade any other pay? Yeah. Mm, yeah. Okay. All right. So what I would say is that so how much did you fund your account, your life account? So which lot size you are using? Which lot size you are using? 0.1 is too much for is too much for 50, okay, yeah, 0.01, yeah, that's perfect. So now, you're no longer trading the life account, right? Or you're still trading it? Mm, okay. So that's good. So what I will advise you is that now, you started this journey with us since January. So I I vividly believe that you don't trade any other pay. And if you are with us here and you are trading any other pay aside from what you are trading and aside from what I'm teaching, you are just doing yourself. That's just the truth of the matter. If you are trading any other pay, you are just doing yourself, because I made it very clear for all of us starting from the beginning of this our meeting that if you decide to be trading other pairs, that means you are not ready to become profitable as a trader, because you have not mastered one. For you to be jack of all trade and master of none, right? So it's better for you to master one, then later you can now decide, okay, whether you can try other pairs. But first of all, master one, understand it, know how it works, know the movement before you can. When you now become profitable, you can now easily transit, right? So that is it. So do we have any other person with us? This guy came in. I thought I saw Bright. Bright was here. Do we have any other person? Let me check. Who is Anuwapo? Bright, you're here with us. Who is Anuoluwapo? Who is that? Please unmute yourself and introduce yourself. If this is your first time, I think this is the first time I'm seeing this name. Anu. Oh, okay, Ima. Oh, okay, okay. You're welcome, Ima. You're welcome. You're welcome. Yeah. So Bright, Bright, hello, Bright, unmute yourself. Happy Sunday. How are you? How is Ghana? Hello, Bright. Is not with us. Bright, can you hear me? Bright Sekiri or Shekari. So I think it's not active. Bright, can you hear me? Let's continue. Okay, actually, this class is. I said earlier that we are going to be having first of all because yesterday I wasn't able to host the meeting with the beginners class, right? I wasn't able to host the meeting with the beginners class, so that was why I said okay, today we are going to we are going to combine both the beginners and the advanced, but I'll first of all handle the beginners first before I can now switch to the advanced, right? So now um I last week I gave the beginners class an assignment, and I've been seeing a lot of mistakes and all of that. Most especially the fib tool, how to use the fib level, right? So now I'm going to explain again how to use the fib level, so that we are going to all understand it, even those that are not here. The video is being recorded, so they can still watch it later and understand how to use the fib level, though I have done it before, but I'm just doing it again for the sake of others that are new with us, right? So that is it. So what we are going to be doing, the fib level, how to use the fib level is easy. And the fib level setting, the settings, that's one of the challenges some of the beginners are having. The beginners class are having. That's one of the challenges. This is the fib level. This is the fib level. In the fib level, we have styles, we have coordinates, we have visibility. So in visibility, we have like 1, 2, 3, 4, 5, 6, 7 checked boxes that we need to activate to show us the exact percent of the fib. The first checkbox is 0.38. The first one is 0.382, which is the 38%. The second one is 0.61. Then the third one is 1, just 1. The third one is minus 0.618. This thing I'm showing you guys is how to set your fib level, because the beginners class, they are making a lot of mistake on their fib settings, right? Then the fifth one is 0.5. The sixth one 0.786, and the seventh one minus 0.27. So once you check this like this, once you input these numbers, what do? If there's any other box that is checked here, you uncheck all of them. You come here and check all of them. Then you come here, the background, you make the background, you navigate it to the extreme end, because when you do it like this, it will make you not be seeing the exact this thing, the exact analysis, your analysis. So it's very good to make it like this so that it will be visible. You can be seeing it, as you can see, as you can see. But if you do it like this, it will look somehow, right? So when you do that, you now come to prices. You click on prices, you come here, levels. At the levels you have percent, you have values. You check the percent, you click on the percent, you click on the percent. Then when you come to labels, you put, instead of left center, you put right, then you come to the next one. Instead of top down, top and bottom, you put middle, you put it in the middle, because I've seen a lot of mistake. Then the font size should be 12 font. That's what you are using, 12. Then after you have done all this, like this, exactly like this, then what do? You click on OK. You click on OK, and this is how it will appear on your trading view. This is how it will appear, right? So it is easy, to do. So follow these steps, then you do it. So that is it for the fib. Then the next one is how do you mark out your fib? How do you use your fib to analyze the market? Like I told you guys, we have we'll have 7 confluences. Ah, 7 confluences that we use in US30. I want to bring it out so that we'll have 7 confluences. Let me copy it. We have 7 confluences that we use. So now 7 confluences I used here. I added market structure, because I added market structure. That's the number one, market structure, right? So now if you're analyzing the market, this is for the beginners. If you're analyzing the market, you have to understand these entry confluences, and you have to use them. You have to use all of them. You have to make sure that yes, is in your chart. You use it for your analysis. So now what do? Once you have analyzed your chart, let's say for instance, we have seen this, that okay, the structure of this market is telling us that this market is a bullish market. This is an uptrend. There is no soothsayer to tell us this is an uptrend, right? We are having higher highs and higher lows. This uptrend is very simple. There is no grammar in it. So we'll go back to the weekly. It's still an uptrend. You understand? So once you mark out your key zones, like this, the highest high, then you come here, mark out our lows. These are low. Then you move from weekly to daily. Like I told us that we usually do top-down analysis each time you're analyzing the market. And if you take my advice, US30, analyze chart once in a week. Once the market come to your entry point, like I always say, once you see that engulfing candle, take your trade with confidence, then allow it to play out. If the trade now hit you out, you will now come back and reanalyze the trade. Don't enter another trade. Take your trade for 1 hour. If you are doing this, there is no how you will not understand what you are doing. You will not pass your account. You will not be making money from the forex market. But the problem that we are having is just some of us are greedy. If you see market moving up, you want to enter. So now this is the highest high. We have already marked out our highs and lows. Then what do you do next? This is a trend line. We'll see a trend line here. We'll draw this trend line from here to here, right? We'll draw it from here to here. Remember what I said, the trend line have to have 2 or 3 touches. It has to have three or three touches, right? So now we have drawn our trend line. We'll now come to the 4 hours. Remember, we already know that this market is an uptrend based on the structure. We have used our trend line, we'll use our key zones, then we'll now go to 4 hours. We'll now go to 4 hours. So once we now go to 4 hours, what do we do? What do we do? Is the this is the major previous low. As you guys are saying, this is the major previous low, right? What do? You mark it out. You mark it out. Once you mark it out, then you now use your fib retracement. Drag it from here to this place, from the low of the previous 4 hours low to the high of the market, to where the market is currently now, right? You just drag it to that place. Let me zoom so you guys can see. You just drag it to that place, right? Once you drag it, this is another zone. I'm just giving an instance. Once you drag it, now have you seen that there is a reaction? There is a reaction at the 60%, 61% level, and there's a reaction at the 50% fib level, right? There is a reaction at the 50 and 61% fib level. If you are to enter this trade, where do you enter this trade? Where do you enter this trade? Simply, you allow the market to come to your 50% or 61% fib level, then you can enter. Then you can enter the market. Once you have seen this, once you have drawn this, you see the 51. Let's say, for instance, this thing now, this market has not really gone like this. You draw this thing and it gives you this 50% and 61. What you just need to do, you don't need to stress yourself. You just allow the market to come to your entry. You wait for it here. You say, when this market tap me here, tap me in here. This is a trend line. You see a trend line here. You also see a zone here. So with this, you are good to go. You are good to go. You just wait for it. When it comes here, you enter your trade. This is the assignment that I gave the beginners class last week, right? So that is it. Do you have any question based on what I just explained? Do you have anyone that have any question? Feel free to ask based on this. Yeah. Okay. Which dot line are you talking about? This thing. This dot line. No. What you are looking at is the percentages, not the dot line. Do you understand? The dot line is not our business. What you are looking at is the percent. Where the market react at the 50 level or the 61 level? That's what you are looking at. You understand? It doesn't matter whether you draw it like this, in as much as it's from the low, in as much as it's from here, you drag it from the low to the high here. It's just like this thing is just like measurement. If we did mathematics in our secondary school, you see measurement. Measure is from one angle to the next angle. This is just like a measurement. You get? It does not matter whether this dot line aligns or not. Yes. There, the top there, where the market, where the market is currently, that's where it will touch. Yes, where the market like. mm, okay, okay, very good. Now you know better, right? Yeah. So that is it. Do you have any other question? Do you have any other question? Okay. Our zones, our key zones. Multiple rejections. Multiple rejections. So, yes. Okay, okay, now, and at every rejection, like this place, for instance, can you see my screen? Can you see here where this cursor is? Now, you see that the market came here, rejected this high, came down, rejected it again. It rejected it up to one, two, three, four, five, six. It rejected it six times, right? Now, this place now, this rejected place now has turned to a key zone because let me tell you, once the market broke it on Friday, even it is not even it's more than the market broke it on Friday, right? The market rejected it up to one, two, three, four, five, six, seven, eight times. That's like how many days starting from January. The market, when did it broke it? It broke it on February. That's to show you all this thing you are seeing now took up to 1 month, 1 month plus before it could be broken, right? So once the market has broken this place now becomes a zone. It now becomes a key zone. Why is it a key zone? Because it's a very strong high that the market refuse to break. I don't know if you understand. The market refuse to break it. Once it get here, the sellers will say no, you can't go forward. They will push it down again. Once the buyers get here again, the sellers say no, we will push it down again. This thing happened for a couple of 1 month plus before on Friday it could now be able to break it and get to this level. I said it, but I will talk about that in our advanced class, how the market went. So now it broke this place, and what you have to keep in mind is that whenever the market has gotten to wherever it is, this market now will still come back here,
will still say come back and take excuse from this place and go up again. Whenever this market comes here, there should be always a reaction. There will be a reaction whether you like it or not, because this place now has turned to a key zone. Once the market gets here, there will be a reaction. Take it or leave it, there will be a reaction. Whether if the market has gone to this 27, it will come back. Whether it has gotten here, it might even retrace. This market now you're seeing from Monday, from tomorrow, I will analyze the market with you guys on advanced class. You will see that the market might likely come and retrace up to this place before it will now start moving up again. It's likely. But mind you that whenever you see a multiple rejection, it has turned to a key zone. Mark that place as a key zone. That it was is a place where the market was very difficult to break. Is a key zone. Is it understood? Okay. Do you have any question? Do you have any other question? Once the market have a okay, let's say for instance now the market came here, rejected here once and go and climb up. Here now is not, we will call it as a minor key zone. It will turn to minor key zone or minor key level, yes. So once you break it just like that, and it will retrace a little bit, then push up. What you'll now be seeing is something like this. Like I always say, something like this. You get, it will just be like it will be, but once you start seeing something like this, here now is forming a key zone. This thing now is forming a key zone. Here now is forming a very strong key zone. This place now is forming a, so once you break it like this, it will now come back. Oh omo, I don break una, I dey come back, make I retrace, make I go up, make I dey go where I dey go. You understand? So that is it. um that is it. So do we have any other question? Yeah, good evening. Bema Blank. Maria. Okay, you're welcome. You're welcome. Mm. Yeah. Okay. Okay, now, yeah, yeah, I get you, Maria. So now, what we're trying to ask is if actually when the market comes here, does here becomes our support line, right? Okay, now what you are seeing here is that the market resisted this place, these highs, and came down here. Once you see that the market has resisted, and you guys should take note, once you are going back like this, you are seeing rejection here. Like I always tell you guys, you see rejection. Can you guys see rejection? One. So here, this thing is just manipulation. Forget about this. This thing is just manipulation. This is market manipulation, right? So this thing now is now a support. Once it has broken it, come back. This now become a support, our support level. So now the market refused to break the highest high, came down again. If you are to trade this, once the market come here, confidently take the market, and once you see trend line, something like this, let me use my long position. You see something like this. You see something like this. You see that there is trend line here. You have already drew your trend line. You are just waiting for the market to come here, take you up. What you'll be seeing that once the market open, especially New York session, it will tap here, go up. But the thing that you can't do is you cannot sell from this place. What you just be waiting for is buy. Because if you say, okay, let me sell from here, you don't know when the market might break this zone, this place, this strong zone. Right? You don't know when the market will break it. That's why some people will be trading. That's why it's not good to trade against the trend of the market. Don't trade against the trend of the market. Always follow the trend of the market. Right? So if you see something like this and you already know that this place is a support level, what you just be doing is just wait for it to come here. Once it comes here, you buy. Once it comes here, you buy. Once it comes here, if you comes here, you buy. You comes here, you close. If you comes here, you buy. If you come here, you close, because you know here is a key zone. It might not break it. It might likely. It might not. It was only on Friday, which is last week Friday, that it broke it and now went to the 61%. I don't know if you guys understand what I'm saying. So now if you see that the market has been rejecting, you come here and say, okay, now this market has been rejected. Where is it going to come now? When it comes here, when it comes to this support, or when it comes to this place, am I supposed to be buying again? Because now there is nothing to trade again. If those that trade, that do swing trading, they will have to wait for almost 1 month and for this market to break, retrace, then they will not enter their trade. They will wait for this market to break, do something like this, come back, then they will not enter. They will not enter here. That's for those that trade break and retrace. But what do we trade? We trade key levels, zones, psychological level. Once you see our confluences, at our confluences we have up to 7 of them. Once we see 3 or 4, we are good to enter the trade. Is that understood? Do you have any other question? Okay, go on. Once the market break this place, now here now becomes the next support. Once it has broken this place, now here now becomes the next support. But this market might likely come and do something like this. If it didn't do it here at this 61%, it will do it at this place. It might likely come and do something like this, tap here, try to sweep liquidity, do something like this. You see it will tap at the trend line and still go up again. That's how US30 works. Do you understand? It will still come and respect. It might break this place, but it will give you a reaction here. I want to break this place. So there is no how that the market will come here and wouldn't react. US30 have never done it. It will never come to this strong zone and will never react. So you can even take trade if you want to trade against the trade, but it's not advisable. You can even come here, take this trade here, and when it gets there, you close. Then when you see a reaction here, if you see a good engulfing candle, you can take this trade up again to this level and you close. You wait for a reaction. If it breaks, retrace, you take again. If you are a day trader, but if you are a swing trader, what do? You have to wait for the market to come to this level, show you that okay, I want to buy, I want to continue buying before you can buy. So what you have to understand that US30 market respect key zones, trend lines, psychological level. You know they use and play. If you backtest the market very well, if you have backtested US30, I've backtested US30 up to 15 times or 20 times. It's always respect key levels and key zones with trend lines. Does that make sense? So have it at the back of your mind. That's why we choose to trade only US30. Understanding and mastering one pair is the best. It will gain you profitability than being jack of all trade and master of none. Right? So now, very soon, this thing will end. I will send another link because it will expire. I will send another link for us to join. So that is it. Do we have any other question on this? Do we have any other question? Okay. Yes. Something like this. Okay, where I took my trend line. This is where I took this trend line is a major trend line. Remember, we'll have minor trend line, we'll still have major trend line. You see where I took this trend line. And where did this trend when did this trend line form? This trend line formed since last year. Since last year, April. Can you see? Can you guys see? April. This is where when it formed. And since that time, you see the way the market has been going. It has never like once you analyze the market, you still follow the trend line. It respect that is major trend line. They still we still have minor trend line.